Hello and welcome to this new video. It's DC Capital, and in this video I will go through last week's trading and analyze the micro E-mini S&P 500. I will start with the weekly review and finish the video with the market outlook, and let's jump right into Monday's trading. Let's start with Monday's trading for the micro E-mini S&P 500. This is the 3-minute time frame, and here we can see that the market has created sell-side liquidity and it is trading lower with that candle here. And also remember that the market does not need to rate the lows of the candles to be valid. It is enough if the market is rating the bodies of the candles, because there is the bulk of the volume and the most of the liquidity. After that, price is trading higher. This is displacement, and also we can see that a bullish order flow is in play, because this bullish order block here is getting respected. Price is trading higher after taking out the sell side liquidity. And now we are waiting for a retracement back into a discount market. And our institutional reference points in this trade are the discount buy side imbalance, also known as busy, buy side imbalance, sell side inefficiency, and this bullish order block in here. We have relative clear targets. We are targeting the buy side liquidity here, and you can see that price is moving higher aggressively into our target. Also notice that we are buying below midnight opening price, New York local time, and we are operating in the morning session kill zone. The index morning session is from 8:30 to 11. What is really interesting here with this particular trade is that market open is giving us the entry, and look at the quick rejection from that 3-minute candle. And why is that? Because we can look at the market open as a Tudor swing, and if we are bullish, if we have a bullish bias and we are anticipating higher prices, we want to see a bearish Tudor swing going lower into a discount market, into a discount PD array to establish new long positions. And this is exactly what happened here. Price traded lower, giving the entry, and from there aggressively trading higher into the target. So next time, if you are trading around this time period, you can look for institutional reference points below the market price when you are bullish, and look for a potential Tudor swing into those reference points, and then for price to trade in the opposite direction into the profit target. This is Tuesday's trading. We are operating in the afternoon session, the PM session for the index futures, and on this particular day we can see that the market is trading lower aggressively, and we are operating at the low of the day. And in here, of course, we are looking for long opportunities after a sell side liquidity rate. And we can see that here market traded lower, rated this short-term low with sell side liquidity below it, and from there price is pushing aggressively higher with displacement, violating this intermediate term high. Why is that an intermediate term high? Because this candle rebalances this sell side imbalance, buy side inefficiency, SIBI, and price is trading through it. So this is a bullish market structure shift, and an early indication that price wants to trade higher into a premium PDA. So we want to establish long positions below equilibrium or in a discount market, and you can see that here on the chart price is trading lower into this 2-minute fair value gap and also in this 2-minute order block in here. Why am I choosing not this candle as the bullish order block? Because this candle has, in my opinion, a little bit too much of wick and too less of body. This candle looks way better because there's a big body and really small wicks, and this for me is the valid bullish order block. We can take our full profit in this premium market, in this sell side imbalance, or at this bearish order block in here. And you can see that price is trading into both objectives and price is acting really efficient for institutional traders. This is Wednesday's trading. It's ADP and we are also in the NFP-Week, and I decided to not participate in the ADP High Impact News event, so therefore I was looking for a high potential trading scenario in the London Open kill zone, and we can see that here price is trading higher, taking out buy side liquidity. We can see that price is trading lower, respecting this mean threshold of the bearish order block nicely, and from there price is trading a second time lower with this placement, creating this sell side imbalance, buy side inefficiency, SIBI trading higher into this, mitigating, rebalancing this imbalance, and also mitigating this bearish order block. And from there we can see the quick rejection from price. Price is trading lower aggressively into a deep discount array, and price rated those relative equal lows with resting sell stops below it. Also notice that here on this candle, this intermediate term low gets violated, and this is an early indication that price is now seeking discount. If you look at the midnight opening price, we are trading slightly higher than that, and that is enough for price to be in a premium market and to trade lower. Remember, if we are looking for shorts in the marketplace, it is ideal to sell at or above the New York midnight opening price. This is Thursday's trading for the micro E-mini S&P 500. It's the 5-minute time frame, and here we can see a buy model kicking in. Price is trading lower and is raiding this pool of sell side liquidity in here with those relative equal lows, and also price is trading lower a second time, and it is raiding the sell side liquidity below this short-term low as well. And after that, price is trading aggressively higher and is breaking market structure to the upside. This candle here is a 5-minute intermediate term high, and it got violated to the upside, so it's an early indication that price is now seeking premium prices and wants to trade higher. In this particular trade, we can see the New York lunch hour, and if the market wants to trade higher in the New York afternoon session, then we can see that the sell side liquidity or relative equal lows created during New York lunch hour are gonna get raided, and once those relative equal lows with sell stops are getting raided, market makers are pairing up their orders and starting an aggressive buy model into the on close orders time period. And we can see that here happening on the chart. Price is respecting this bullish order block mean threshold, and it is seeking buy side liquidity. Also notice that we are below the midnight opening price, and price is finding the high during the on-close orders time period from 3 p.m. to 4 p.m. And yeah, this is Friday, last trading day of the week, and it's NFP day. Really volatile day, a lot of manipulation happening here, and personally I'm not trading NFP, I'm staying sidelines, don't want to participate in that. But for the completeness sake, I want to also analyze this day, and we can see here that there's a tight range being created with resting buy stops and resting sell stops, building liquidity on both sides of the marketplace, and you can see that price is hovering in the midnight opening price. First move higher into a premium array, seeking buy stops with buy side liquidity here. I have marked this opening from that bearish candle, price right at that, and I have marked this high of this bullish candle, and this is where all the liquidity is resting, and from there price is trading lower. What is left in the marketplace? It's really obvious, those relative equal lows with sell stops. Price is seeking that. We are in a deep premium market above midnight opening price, and it's a great shorting opportunity somewhere in here. If you want to trade this particular day with NFP, you can go to lower time frames, 1 minute, 2 minute, 3 minute chart, or even a 5 minute chart, and look for setups around here to short into the sell stops. And one thing I want to mention is that right now we are in a risk off environment, and the US dollar is really strong because the Fed is increasing interest rates aggressively, and therefore money will flow into the US dollar, and therefore we can expect the index futures to trade lower. And usually in those kinds of environments we see most of the times a Tudor swing once price is trading higher, and we can expect that they are pairing up orders and just raiding those highs by a little bit, and from there moving aggressively lower. In those environments we are not expecting price to retrace a lot because price is really heavy, and we are only looking for the previous 3 days highs or lows to get raided by just a little bit and then sell off aggressively. Also, we anticipate that all bearish PD arrays are getting respected. Bearish PD arrays could be a bearish mitigation block, bearish breaker block, bearish fair value gap, bearish order block, a bearish rejection block, or an old high or an old low. And usually we see that price is respecting those, and it continues to seek sell side liquidity. Okay, with that being said, I will jump right into the market outlook for the upcoming trading week. Welcome to the outlook for the micro E-mini S&P 500. This is a daily chart, and here we can see that price is trading lower after raiding those relative equal highs with buy stops, and price is respecting the premium PDAs. And my next drawn liquidity is this bullish PD array, this bullish order block, and maybe this buy side imbalance. Also notice that the price is just trading slightly higher than its previous daily high, and it is violating this daily high by just a little bit and sells off aggressively. Because we are in a risk off environment, it is reasonable to expect that kind of price action, and we are not looking for those big retracements because the market is really heavy right now. Same thing is said here. If we are looking from this swing high to this swing low, this is the current trading range where price was at, and price of course could trade higher into this fair value gap in here, but price is not doing that. Price is trading into this fair value gap and into this bearish order block. This is the US dollar index daily chart, and we can see here that the US dollar is really strong. It rated those sell stops, sell side liquidity, and from there it is pushing aggressively higher, making a new high. And we can see that price traded lower into this buy side imbalance, and from there trading higher. Also we can see that this order block here got respected most recently, and a potential target for me is this level here, and you can check that on your own charts and try to find that level and try to determine why that level is a key level for me personally. And the dollar is, in my opinion, likely to trade into this level because, as I said earlier, we are in a risk off environment where the US dollar is pushing aggressively because of high interest rates, and money is flowing into the US dollar because the higher the interest rates, the more investors are putting the money into the US dollar, and therefore, of course, it will increase in value. With that being said, I will finish this video here. I hope you liked it. Please leave a comment, like and subscribe to my channel. And I wish you all the best in your trading and a successful upcoming week. And always remember, there's no need to have FOMO or being impatient. Wait for your setups, be patient, don't try to force it, don't try to chase price. Price is coming to you. Sometimes less trading is better trading. I'm out. It's DC Capital.